All right, Jeff Santoro, here is a crazy number for you. CrowdStrike stock, since January 5th this year, that was the second trading day of the year, it's up 74%, pal.
And it's still down how much from its all-time high or recent high?
Jeff, the answer to that question is it's more than 43%, and the peak was in late 2021. So this is a stock that's still below its all-time high. And it's been like a year and a half. It's closing in on 2 years since it's fully recovered. But again, the day that you wanted to buy it, January 5th of this year, the stock is up 74%. And I know, Jeff Santoro, this is a stock that you and I both would happily buy today. We've talked about that. This is The Smattering. I'm Jason Hall, joined by Jeff Santoro. We're going to talk about a couple of reasons why we would be happy to buy CrowdStrike stock. But before we do that, just a reminder, the Motley Fool sponsors our videos. If you're looking for even more great stock ideas, be sure to check out our special link, fool.com/The Smattering. You see it right here on the screen. The Fool's going to give you its 10 best stocks to buy right now. Check out that link after you watch the video. Jeff, all right, let's talk about CrowdStrike a little bit more. You kick us off. What is your favorite reason, your number one reason why you would happily buy CrowdStrike stock right now?
So when I started to look back historically at the numbers, I was surprised. The year-over-year revenue growth for this company has actually slowed in almost every single quarter since it came public back in 2019, which is astounding when you consider how strong this stock has done over the long term and also how good of a business it is. I think the big thing to focus on here is the fact that even as revenue has slowed slowly each quarter, year-over-year revenue, like this last quarter, it was 37%. That's still really good. And at some point, you would imagine it's going to stop slowing and it's going to either level off or tick back up. But what I've been watching for the time I've been a shareholder is, when is profitability going to turn positive? The story has been, since its IPO, great revenue growth, great customer retention, great cash generation, unprofitable. And now that money's not free, we're seeing which companies have been choosing to be unprofitable and which have to be unprofitable because they're not able to become profitable. And I think we've seen some encouraging signs over the last 3 quarters with CrowdStrike. So at the end of the quarter that ended in January of this year, they were still net income negative. They had a net loss of $47 million. In the next quarter, that was a positive net income of 500,000. And then in this most recent quarter, net income was 8.5 million. So that's a really big swing in just 3 quarters. And I'll be keeping an eye on if that can keep heading in that direction or at least stay positive. But I think that's good. That's a good thing to see from this company, that now that it's going to be a little bit harder to raise capital if they need it, you want to see some profitability. They've been able to make those steps.
Jeff, I'm going to go even further on the profitability side, talk about cash flows. And the reality is that CrowdStrike's been making it clear that they can make money for a while. If you go back to really the beginning of 2020, so pretty early in its existence as a publicly traded company, has generated free cash flow, and that number has continued to grow. So that to me was really the precursor to the likelihood that it would move over to GAAP profitability. Now, of course, you have stock-based compensation. It's kind of a thing that drives me nuts. And that positive free cash flow, it exceeded stock-based compensation in early 2020, and that continues to grow at a great rate. So even adjusting for stock-based compensation, that's the reality. But Jeff, we've talked enough about profitability and cash flows. Here's the second thing that to me is so important for CrowdStrike that demonstrates why it's been able to grow those cash flows and been able to grow, even though revenue growth rates have slowed, like you said, a little bit every quarter. It keeps customers. Customers grow with it. They spend more money with it. So this here retention rate, this dollar-based net retention, is almost like comps. For comps, same store sales for retail businesses and restaurants. This is kind of like comps for software companies. And you see, they set a benchmark of 120%, which basically means for every dollar a customer gave them last year or this year, they're giving them $1.20. And they have consistently stayed above that 120% benchmark that they set for themselves since the fourth quarter of 2018. Again, it's been a little bit lumpy, but consistently been well above that. And to me, Jeff, that says you have a business that not only is it profitable, not only is it cash generative, like you said, not only is it growing, like we've talked about, but they have some real durable moats. They have some clear reasons why customers do business with them. They have some pricing power. They retain those customers. They grow their relationship with them over time, and they make more money. Now, so those are a couple reasons why we would happily buy the stock right now. Jeff, do you have any thoughts or concerns or maybe words of caution you'd like to put out there for anybody watching the video.
I do. So I would I said earlier, you said earlier that we would both happily buy this stock right now, but my buy is with a caveat. And to me, this is a stock that you still want to do some degree of dollar cost averaging into. I don't think the valuations that we're seeing right now are back up the truck valuations. I believe the stock is still trading around 15 times sales, which is still very expensive. As encouraging as all those numbers you just gave, we both just gave are, I still think this is a little bit pricey. And to me, adding to the uncertainty, adding to my desire to dollar cost average into this one is I think there's going to be a lot of winners in the cybersecurity space, even if there is consolidation over the next several years. It's really hard for me to know, not being a person in the industry, if CrowdStrike's going to be the big winner or just one of the winners. And when you're priced at 14, 15, 16 times sales, that's the market thinks they're going to be a big winner. And I just don't know if that's the case because there's other strong businesses in this space. So that's one thing that I'm keeping an eye on. It's a buy for me right here, but maybe not a back up the truck kind of buy.
Yeah, I think that's a fair way to think about it. And I agree with you on the value on the competition side, right? Generally, like we've seen, Netflix, for example, has basically taken all of the profits in streaming. Apple has taken all of the profits in smartphones. It's not uncommon that we see one massive winner in these tech disruption sort of areas. But I do think cybersecurity, because again, Microsoft is already a big winner. There's a lot of companies in this space that CrowdStrike works with that has overlap. Everybody doesn't do everything in this space. So that's another reality. But again, talking about the valuation thing, this is a stock that, again, if you look at the valuation metrics, it looks crazy cheap compared to just about any time except for the past 9 or 10 months. But looking at some numbers to me that are really important, those cash flow numbers, trades for 37 times trailing operating cash flow and almost 50 times free cash flow. And that's just really, really expensive. You're saying if something happens and the company can't continue growing free cash flow per share, you'd be fine if you bought shares today and it took the company 49 years and 2 months to give you back all of your cash in free cash flow that are generated. And that's just a really, really high premium to pay for any company. So I think investors should be cautious about building out a position over time. Don't rush into it, like you said. But over the long time, I think it's definitely going to be one of the winners. You're probably going to get better and better opportunities over time to pay a better valuation for the company. So investors can be really patient when building out their CrowdStrike position.